Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the whole wide world you are tuning in from. I'm excited to be with you here this morning as we shall be taking another fresh new look at the financial market and, of course, start preparing ourselves for the second half of the week. Before we kickstart the session, I would like to really appreciate every single one of you who had waited for this moment. It actually took me a long time today to get myself actually prepared. I have to sort out my little boy is right behind me here watching his cartoon, but let's just hope he wouldn't disturb during the course of the session. So excited to be with you here this morning, and I do hope you are well pumped up and ready for the financial market. Since the beginning of the week, we've done pretty well across the financial instruments that we have been monitoring since the beginning of the week, which includes the US All Spot, which have done pretty well since the beginning of the week. We had the privilege of buying, and at some point yesterday, we saw how price declined following the EIA report, which came in at a phenomenal high. So we're going to be deliberating on that in a moment. Then we also have the USDJPY, which was newly introduced into our watch list after 4 weeks of absence on that particular asset, though we are yet to get some traction on that one. And finally, the XAUUSD, which happens to be the most profitable asset on our watch list, at least for this week. So we are going to be looking into the details on this chart, and in fact, in preparation for today, I have identified simple and insightful trading setups that we will be using to guide our trading decisions for today. And for those of you who are with me on both my TradingView and Telegram platform, you must have gotten an update as to how we are going to be managing these positions. But today we are going to be expatiating on that and see how well we can manage the existing position while we also prepare ourselves for the next move. For those of you who are actually joining us for the first time and wondering what this is all about, I usually share a couple of videos during the weekend which details what my expectations are looking like ahead of the new week. And during the Forex Morning Mastery, we come together as technical traders, gathering here as a community to manage and do follow-up details on these trading ideas ahead of both the London and the New York session. And the session officially kickstarts about 9:05 a.m. West African time, 8:05 a.m. UTC, except for days like this where I had to give permission for some time before I come up. And it is important for you to also note that this is not um, a signal service platform. So what we actually do here, my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. And the more time you spend with us in this community, the better you get to understand or comprehend our analytical approach, which eventually helps you to make independent trading decisions and, of course, enhance your trading strategies. So once again, I do welcome you on board and encourage you to actively engage in the comment section. I see your comment here, Big Ben. Good morning to you. Glad to have you around with us. Hello, Adeni Babalola. Good morning to you. Glad to have you around with us today too as well. So with that being said and clarified, I think it's high time we moved into our plans for today. So as usual, we will be keeping tabs with the fundamental factors that will be influencing the market sentiments today. And as you all know, by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. And so far this week, we've had some bunch of mid-tier economic events, which obviously affected in one way the US dollar. For instance, yesterday, Tuesday, March 26, we saw the durable goods order, which came in higher than market expectation, which further emphasized the resilient character of the United States economy. In fact, in the last couple of months, the U.S. economy has been so resilient, resulting in stickier inflation, and the chances for interest rate cuts are beginning to decline, despite the Fed's emphasizing there is going to be 3 rate cut hike for this year. So it's still in doubt. Everybody is still in a limbo as to what the trajectory of interest rate cuts will be from the United States. So we're still looking for more data, and we still have much more event coming up later in the week to guide that direction. Then yesterday we saw the API weekly crude oil stock, which in fact came in at a phenomenal 9.337 million, which is a beautiful signal that the supply is increasing, which for me is surprising anyway. As okay, we can still say so. I was considering the fact that the oil supply from Russia may have reduced, but we learned that they've increased their capacity of production in other refineries besides the one that was attacked by the Ukrainian military. So we're going to be looking at how this has affected the US oil market and how we will be guiding our next step on that asset. So you don't want to miss out on that one. Then for today, Wednesday match, hold on a second, I would like to, so we are taking out, so depending on the asset we are looking at, we are going to be focusing on economic features from both the United States and the Japanese economic docket. So I would like to refresh my economic calendar, and okay, here we go. Today, Wednesday, March 27. Now today, Wednesday, March 27, we're going to be looking forward to this speech coming in from, what's his name again? So I'm trying to switch my screens here. Okay, so we have it right here. So we are looking forward to Christopher Wallace, who is a Fed Reserve Board member and is also a member of governors of the Federal Reserve System. And he will be giving a speech later today, much more later today, I think in about 12 to 13 hours from now. And usually when we anticipate speeches from Fed official like this, it's considered to be a significant event for market participants to gain insight into the Fed's monetary policy stance, economic outlook, and of course potential future policy actions. And the anticipation of this speech can significantly influence the way market participants will behave ahead of this event, which we will be looking at to see to look out for patterns and structures that can guide our decisions ahead of this event. And one more thing I would like us to emphasize, though we only have one event to look out for today, I also want us to take into consideration the anticipation of the gross domestic product annualized for Q4 from the United States, which is coming up tomorrow. And we are also looking forward to the CPI data coming in from the Japanese economy tomorrow too. So these are very high impactful events to look forward to. And obviously, we may see a situation today where market participants will, major key players in the market may step aside, waiting for this announcement before making any aggressive bets going forward. So we may likely be seeing some extended sideways trading activity today, especially ahead of this event. So we are going to be taking all of this into consideration while we review the current market structure. So with that being said here, we shall be diving right into the chart as usual to see how we want to be managing and preparing ourselves for the next move today. So I see you, Issa Yusuf. Good morning to you. Glad to have you around with us this morning. So with that being said, we shall be diving right into the chart. And as usual, the first asset we are going to be taking on this morning is going to be the USOILSPOT. And on this particular asset, we've done fairly well since the beginning of the week. Remember, at the beginning of the week when we met here on Monday, we were looking out for buying opportunities after identifying a range bound structure, and not until yesterday we saw this beautiful opportunity to sell, though we came in a little bit late, but we were able to capitalize on it. So for the sake of educational purposes and for those who missed out on our earlier editions, let's run through this current structure to see what really happened here on the 1 hour time frame that guided our decisions for this week. And I also want to emphasize here that for those of you who did not watch my top-down analysis on this asset, I encourage you to do so you can have a background knowledge of how we got to this point. So at the beginning of the week, we did a top-down analysis on this particular asset where we did identify our key level and major structures on the higher time frame. So during the Forex Morning Mastery, we only deliberate on the 1 hour time frame. So if you missed out on that first session, please check the link right in the description box below and keep yourself updated after this session. So going back into the chart, so at the beginning of the week, it was more of a range bound structure as we saw price action oscillating right around that our key level for this week, which was identified around the $81 zone. And while price was oscillating right around our key level, we saw price confined within the $81.13 level and the $80.70 area to emphasize the prevailing uncertainty in the market at that particular point in time. And when we have a range bound structure like this, it's clear that the market is going through an indecisive phase. So we usually exercise patience, waiting for the market to make a decision, which will reflect on the chart as either a breakout of the resistance line of the range to give us an opportunity to buy, or the breakdown of the support line of the range to give us an opportunity to sell. Now, with the fact that when we looked at the higher time frame, we were looking at a situation where price action was already evolving into a reversal pattern. As you will see, as soon as price tested that area around the $80.25 level, we begin to notice this limiting factor, this barrier for sellers, as we saw price find higher lows, giving us what was looking like a reversal pattern on the higher time frame, with the $81 level, that is the key level, serving as the neckline of that reversal pattern. And of course, you know how we treat our reversal patterns in this community. As soon as we have a structure like this, we mark out the neckline and wait for price to break out of the neckline to validate that reversal pattern. So with this understanding in mind, we were looking out for price breaking out of both the $81 level right here and the key level at the $81 area, and of course the $81.13 level to join our first buy position for the week. Then we went on to add more positions at the breakout of the $81.70 level. And yesterday I did tell us all to move all stop losses to secure the current buy position. And if you had done that, you must have been taken out at least with a minimum of about 150 to 200 pips in profit. And for those who capitalize on this opportunity, well done and kudos to you. Now, during my updates yesterday, we emphasized we talked about the bearish momentum, though we did not have the Forex Morning Mastery yesterday, but I did the exclusive price action technical analysis, which I usually share with us all, like about 30 minutes into the New York session, where I did talk about the potential of sellers in this market yesterday. And I did mention here that the uptrend scenario in this market is still looking very intact, and that we may see a situation where price action may drop into this area to incite the uptrend continuation. And I did emphasize that for those of us who are counter trend traders or who feel comfortable taking short-term trading opportunities, you may be looking at the breakdown of the $81.70 level to join a decline. But I did mention that I wouldn't be doing that, as I will only sell when price action breaks below our key level at the $81 area, and of course the $80.70 level, as you will see here. So currently we have a minimum of 2 sell positions running in profit right now, and in fact I will be advising us all to move all the stop losses, secure the current sell position. I think anywhere around the second entry at the $80.70 level seems much reasonable to move all stop losses to. And I will be telling you the reason why I've said we should move all stop losses. But before we go into that, let's quickly talk about what was the cause for the decline in US oil prices yesterday. Now, according to the report which we talked about earlier, there was an unexpected swelling in the US crude oil stockpile, which contributed to the loss in the market yesterday, as the market participant reacted negatively immediately after that report came out. So, as recorded, the US crude oil inventory surged by approximately 9.3 million barrels for the week ended March 22, contrasting with the 1.5 million barrels that was expected by market participants that will be declined off. Now, this for us is a red flag that demand is not meeting up with the rate at which supply is coming in. And when this happens, it usually reflects on the chart as oversupply, leading to price action crashing to the downside. However, in as much as this report came in at a high, that is high crude oil stock, I still have a strong belief that the momentum in this market is still looking bullish, as we also have some other various factors which could still stabilize the price of oil. One of which is the disruption of Russian refinery capacity due to recent Ukraine attacks, which had happened in the last couple of weeks. And analysts estimate that Ukrainian drone attacks has disrupted approximately 12% of Russia's total oil processing capacity, further impacting oil prices. Then we also have the geopolitical tension in the Middle East, of course, which has always incited concerns as regards to oil disruption from that area. Now, based on these factors here, we're still in a balance between buyers and sellers. And what we are going to be doing is to try to see how the market participants are behaving in the market, which will be reflected on the chart as price action. But before we go into that, we should take note that market participants will be looking forward to the EIA crude oil stock change report, which will be coming up later today. And given this development, it's important that we secure all current sell positions, as anything could happen prior to this event. Now, if we go back into this current structure here from a technical standpoint, you will see that price action is currently trading around this ascending trend line we identified on the higher time frame. Now, for the sake of clarity, let's revisit the 4 hours time frame to see what I'm talking about here. So right here on the 4 hours time frame, after considering the character of price action since the second week of this month, remember we acknowledge that price action has been finding higher highs and higher lows, giving us a couple of ascending trend line to work with. And as long as price action remains above our ascending trend line, we want to be looking out for patterns and structures that supports the idea of buying, and we will not be considering selling unless this ascending trend line is broken to the downside. Now, zooming into the current structure, you will see here that price action has broken down our key level at the $81 area, and currently price is trading around that ascending trend line. Now, the question as we head into today's trading session is whether this ascending trend line will be broken and breach to the downside to incite a sell-off, or we may likely see a reversal pattern resume around this area, respecting the ascending trend line one more time to push price to find new highs. Now, we are at a crucial juncture in this market where it is important for us to detail how we will be managing positions around this ascending trend line. And if you look at that structure there, we have a beautiful level, which is the $80.50 area, which I will be encouraging us all to mark out on our chart, as we are going to be using this level today to guide our trading decision. So we have a beautiful confluence with that $80.50 level and that ascending trend line. So if any form of reversal pattern is identified here, we want to be marking out our neckline and then buying the breakout of the neckline. But a breakdown retest of the $80.50 level will definitely welcome selling opportunities. So with this information here, scaling back into the 1 hour time frame, we have something to work with for today. So we have a structure right here. We have the $80.50 level sharing a beautiful confluence with our ascending trend line, and as it is right now, price action has even broken down that structure. So are we going to see a retest of this structure to incite more selling opportunities to the downside? Well, let's exercise patience and see what will happen here. And if it does happen, we are ready to join another sell opportunity to the downside, where we are looking out for more opportunity to sell at the breakdown of the $80 area. So this is how we are going to be managing our sell positions for today. And if anything new comes up, I will be giving us updates on both my TradingView and Telegram platform. Now, in as much as we are looking out for selling opportunity at this juncture, we cannot ignore the potential that this breakdown could turn out to be a false one. And if it turns out to be a false one and buyers begin to resume around this area, considering the fact that this is an ascending trend line, we may be seeing patterns and structures that will support the idea of buying. So we will be looking out for any form of reversal pattern around this area to join any uptrend move from this point. Now, if we look at the structure, considering the impulsive bearish leg that happened here, we may be seeing price transition into an inverse head and shoulder, where this breakdown could turn out to be the head, and then a right shoulder happens here, where the breakout retest of the neckline could incite the second leg of the uptrend that started this week. So let's exercise patience here and see how the market is going to be reacting to the structure. And for the bullish setup, if it so happens, I will be giving you updates on both my TradingView and Telegram platform. And for the buying idea, I already have a buy stop order above the $81 area, and if we lucky enough to identify a reversal setup here, then we can join even before the breakout of the $81 level happens. So this is my simple view on the US All Spot for today. I hope I made myself clear. If you have any questions whatsoever, feel free to let me know in the comment section below, and or you need any further clarification in that regard. So I will be taking the next 5-10 seconds off to see if there are any questions before we move on to the next asset on our watch list. And what else again? Take that time to also mark out these levels on your chart. See you soon, guys. All right. So in the absence of no questions, I want to assume that we are all on the same page, and in that regard, let's move on to the next asset on our watch list. So the next asset we are going to be looking at this morning is going to be the USDJPY, and from all indications on the chart, all our buy positions from the beginning of the week has been closed with some modest profits, as price action appears to be going through a correction after testing that new high around the 151.970 zone. And for those of us who took advantage of this opportunity, well done and kudos to you. Now, for those who missed out on our earlier sessions and for educational purposes, let's run through what really happened here on the USDJPY 1 hour time frame. And if you had missed out on our top-down analysis on Monday, check the links right in the description box below to navigate our analysis on Monday on this particular asset. So at the beginning of the week, we had this range bound structure where price was within the 151.430 and the 151.050 area to emphasize the prevailing uncertainty in the market at that point in time. And for the fact that price action was trading above our key level, which was situated at the 151.200, we obviously was looking out for patterns and structures that supports the idea of buying. Now, with this understanding in mind, we had our buy stop order just right above the above the resistant line of that range bound structure to trigger our first buy position for this week. And remember that for about 36 hours, this buy position was running in a loss. And remember me saying that we should allow our stop losses to be way below that key level to give enough breathing space for price action to move around. So we saw the traction resume all over again yesterday. Price continues to find new highs, and then we added more positions at the breakout of the 151.625 and the 151.780, and I did updated us to move all stop losses to secure the positions. And if you had done so, you must have been taken out with a modest size of profit on this particular one. And so for everyone who capitalized on this opportunity, once again, congratulations to you. Now, as we prepare for today's session, what is really going on in the market? What is driving price action behind the scenes? Well, I can say that the current uptrend in this market is largely influenced by the Bank of Japan's dovish stance, signaling its commitment to maintaining accommodative monetary policies for an extended period of time. Now, the idea of the pivoting from the current ultra loose monetary policy is still there, but with latest development, policymakers from Japan are saying that they wouldn't be aggressive with this moving into a positive interest rate for this year. So this is not sounding too well for investors, especially those who are intending to buy the Japanese yen, resulting in the US dollar taking advantage of this. However, the ongoing US dollar, which is driven by the uncertainty about the Federal Reserve projected interest rate cuts, may be limited due to signals of potential intervention by Bank of Japan. A couple of days ago, we had a policymaker of Bank Japan, I can't remember his name right now, where he did mention that the Bank of Japan is fully ready to intervene if the value of the Japanese yen continues to decline. And this may likely incite some uncertainty in the market, where major key players who are taking advantage of this uptrend may want to start taking some profits off the chart, which could influence a retracement move or probably a sell-off to the downside. So we are going to be taking all of these market dynamics into consideration while looking at the technical structures on our chart. So this morning, while I was dissecting the current market structure, I was able to identify a new ascending trend line that will be guiding our trading decisions going forward. And after considering the character of price action in the last 24 hours, which was obviously bullish, we were able to connect the series of higher lows here, giving us this ascending trend line to work with for today. And you know how we use our ascending trend line, of course. As long as price remains above them, we look out for patterns and structures that supports the idea of buying, and we are not going to be selling unless this ascending trend line is broken and retested. Now, as it is right now, the last 15 to 30 minutes has seen price action break down both the ascending trend line and the 151.625 level. So this level here is going to be playing a significant role for us today. As you will see, we saw the breakout happen here yesterday, which triggered our second buy position. We saw buy pressure around here, but now price is breaking down that structure, so we cannot ignore this. So what I will be doing now is to look out for a retest of the structure to join that continuation to the downside, if that is going to be the case. So we are going to be waiting to see this candle close. This candle still has about 15 minutes to close. It could still close in the form of a hammer candle, which theoretically is a sign that buyers are still present in the market. So we want to wait for this candle to close and see how it will react to that confluence surrounding the ascending trend line and the 151.625 area. So if we see anything like this, maybe on our 15 minutes time frame where price continue to find selling pressure here, then we could join that decline to the downside and looking at adding more sell positions at these multiple levels you can see on your chart right now. So that is how we are going to be guiding this bearish bias today. Let's see how the market will play out, and if there's anything new, I will give you an update on both my TradingView and Telegram platform. Now the bullish expectation here is still very much intact, as I do have a buy stop order above the 151.780, which is sitting right above that ascending trend line. So if price action can climb back above the ascending trend line, we will continue with the uptrend situation, and then a further breakout of the 151.900 level will be welcoming more buy positions to our existing trade. So let's see how the market is going to play out here. Let's see how this candle is going to close before making the next course of action. So I hope I made myself clear on the USDJPY. If you have any questions, feel free to let me know in the comment section. So I will take the next 5-10 seconds off. Let's see if there are any questions before we move on to the final asset on our watch list for today. Okay, so in the absence of the questions, I guess we are all on the same page, so we shall be moving into the final asset on our watch list for today. So the final asset on our watch list for today is my favorite amongst them all, which is the XAUUSD, popularly known as the gold spot. And on this one, we've had a tremendously profitable week, as we did capitalize on both buying and selling opportunities in the last 48 to 60 hours in this market. So for those of us who capitalized and stayed faithful with our analytical approach, well done and kudos to you. So let's review this current market structure we saw here on the XAUUSD. If you had missed out on my top-down analysis on this asset, I encourage you to watch my weekend videos. The links are right in the description box below to have a background knowledge of how we got to this point we are. So at the beginning of the week, though, the market started the week on a strong bullish note, but it was more of a range-bound structure where price was confined within the 2,178 and the 2,164.50 level, emphasizing the prevailing uncertainty in the market at that point. However, something interesting happened during our analysis session. I think it was prior to the New York session, and of course for those of you who were around to watch my XAUUSD live monitoring window, we acknowledge how it has become difficult for sellers to break through that support line at the $2,164.50 level, as you will see here. And due to this reason, and coupled with the fact that price action was above our ascending our key level at the 2,145, I was of the opinion that price action may use this zone as a platform to find new highs. So as a result of this observation, we quickly identified and added another level at the $2,169 area to join that uptrend move. And as you will see, price broke out of that structure. If in any way you missed out on that opportunity, the market came back to take the buy limit order, inciting an uptrend move. And in light of all this development, we were able to capitalize on 1, 2, we also added one more here, 3, and then we added the final one here, 4, which the fourth one did not do very well. The first 3 ones did very well, as we were able to scoop in, I think, a minimum of 500 pips on that buy position, I guess, was it? Yes, I think, yes, a minimum of 500 pips on that buy position before yesterday's session. If you watch my exclusive price action analysis session yesterday, I did say here that for those of that we might see selling pressure resume around the 2,195 if price does not continue the uptrend. And one of the reasons why I said this was looking at the past year, we saw this bearish signal around this zone here. So I did mention that if price drops below the 2,195 area, it will give us a counter trend opportunity, which could be a retracement of that impulsive move. And I did mention here yesterday that if price drops, that we want to be looking out for reversal patterns around this 2,178 zone, which interestingly shares a confluence with that newly identified ascending trend line. Remember, we had this ascending trend line in place here yesterday, as you will see here, and when price continues to trade above the ascending trend line, it makes a lot of sense to look out for buying opportunities. And if you look at what has been going on around this $2,178.50 level since the later part of the New York session yesterday, you will see how price has been finding buying uptick around this area, giving us a clue that we might be seeing the emergence of an uptrend continuation from here. So as a result of this, we already have a buy position triggered at this point in time, though we still hope that this momentum will continue. So at this point in time, we have roughly approximately about 700 pips in profit from both the buy and sell positions. And for those of us who capitalize on this opportunity, once again, well done to you guys. Now, while the US dollar consolidates its previous rebound, the US Treasury bond yield is still struggling to gain some traction amidst a shift in market sentiment. Now, yesterday we saw a better than expected US durable goods order, which reinforced the perception of a resilient US economy. And with persistent inflationary pressure, the Fed majority are beginning to lean towards the possibilities of the Fed maintaining higher interest rate for an extended period of time, thereby supporting the US Treasury bond yield and potentially affecting the US dollar as well. Obviously, we do know how the US Treasury bond yield is directly proportional in value to the US dollar. So at this point, I still think that market participants will be exercising caution as major key players will step aside, are waiting for the clarity on the Fed's monetary policy trajectory before making any significant decision. And as a result of this, one of the Fed Reserve inflationary data, which is the US personal consumption expenditure, which is coming up later in the week, that's on Friday, will be giving us an insight into that. Then we also have the GDP data, which is coming up tomorrow, which will be giving us an insight into how healthy the United States economy is. Now, as a result of this, and looking forward to this major event, we may likely be seeing an extended sideways trading activities as market participants step aside and await for clear indications of what the Federal Reserve monetary policy is going to be looking like. And in fact, in the last 18 hours or so, we have been seeing a consolidation phase happen around this area. As you will see, price action is currently range bound, as you will see right now. So let me highlight this quickly so that we can all be on the same page here. So we have the 2180. I think that is let's use the 2180. So I want to give it a different color. So we have the $2,180.50 level. So I will give it a wine color now, and then so that it will be differentiated from the other structures we have here. So we have the resistance line right there, and then we have the support line of that range right around the $2,174.20 level. All right, so we have a range bound structure happening around this area. So we already seen the signal of such. So let's see how extended this is going to be before a final traction comes out, maybe in the next 24 hours or so. But on this note, we still remain very bullish with the intent of adding more positions at the breakout of these levels we identified at the beginning of the week. So in as much as we're looking out for buying opportunities, we cannot ignore the potentials of sellers coming in as well. And remember, we have this ascending trend line in place. So for now, this ascending trend line will be our yardstick for today's trading activity. So if price breaks down this ascending trend line, then a breakdown of the $2,174.20 level, that is the support line of that range, will welcome selling opportunities for us. So let's see how the market will play out. So are we going to be taken out of this buy position in a loss and a sell position triggered for us, or will this bullish momentum continue to the upside? So with a matter of time, we get to know. Just let's exercise patience and wait for these structures to mature. So this is my simple view on the XAUUSD for today's trading session. So I hope you mark out these key levels and these levels we've identified on the chart, as we will be needing them as a reference point to guide our independent trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section. I will be taking the next 5-10 seconds off to wait and see if there are any questions before we start rounding off on today's Forex Morning Mastery session. All right. So, in the absence of no questions, I guess we have come to the end of today's Forex Morning Mastery session, and we were able to take on all the three financial instruments on our watch list for this week, which includes the USOILSPOT, the JPY/USD, and of course the XAUUSD, all of which we were able to identify simple trading setups to guide our decisions for today. And I do hope you all marked out these levels accordingly on your chart, as we will be needing them to guide our trading decisions for today. And let's exercise patience and wait for the structures to mature before any position is being triggered. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, you want to be having a well-defined risk management strategy in place. For those of you who joined us for the first time today, I do hope you are able to gain one or two things from what we discussed here today. And if you did, you want to be part of our subsequent editions, as the more time you spend with us in this community, the better you get to understand our analytical approach, which eventually will help you in making your own independent trading decisions. So it's on this note I would like to wish us all the best of luck today. It has been a wonderful moment with you guys, and I look forward to seeing more of you same time on Friday's session, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well this asset have been doing and also prepare for the last trading day of the week, which promises to be another exciting one, as market participants will be rounding off their trading activities ahead of the weekend, and we do want to be capitalizing on that traction on that same day. So I look forward to seeing you guys then. Until that moment, I wish you best of luck, and trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.